Okay, good evening, everyone. Thank you for giving up some time this evening on a Thursday. We are running this session for you today because some of you might be aware that you have been issued with what we call a remedial pension savings statement, and I'll come on to a bit more what that means in a moment. But I want to talk to you about what that is and what it's telling you and what you might need to do as a result of that. The bulk of the session is going to focus on process. I'm not going to get too into the technical tax side of things. So it's just going to be process orientated. Of course, I'm happy to take questions as always as we go through the session, but just so that you know, we're not going to overload you with pensions technical stuff. We will go have a little bit of a recap on some things, but it's more about understanding what you might need to do now, really. You are more than welcome, everyone. Sorry, we've still got some sound issues. See if we can fix those for people. Okay, so because I haven't run this session before, you're all some guinea pigs, which is quite exciting. I think we'll be here for an hour and a half, but I don't know. So we'll find out, won't we? It might depend on how many questions that you have as we go through the session. Okay, so we're going to send slides out afterwards for anybody who missed that. We're also going to be recording the session as well so that you can watch it back if you need to. Okay, the idea today is just to try and impart some information to you and make you aware of some options that you have as well. Still people joining, this is exciting. Anna hasn't got the brown envelope yet. Oh, we'll come on to that in a moment. So just a little bit of housekeeping before we get going. I'm hoping everybody can hear me now. Teams is great, but sometimes the local connection issues can cause problems. So you'll notice that your microphones and cameras are set to off. Any of you who've been on my webinars before will know that's deliberate because I can't trust any of you to behave. No, seriously, because there's a lot of you on these sessions, and if we have microphones on, then we can pick up a lot of background noise, and similarly with cameras, we're effectively trying to live stream 100 videos. It doesn't really work very well, particularly with slides, and we've already seen we've got a few people who are experiencing some technical issues already, so that's why they're off. We do have the chat box running. You've probably seen that already. I will just put a little chat in there, so we can use that for questions during the session. If for whatever reason your chat box isn't working and I haven't answered anything during the session that you need me to, when I send you the slides around, you'll have my email address. So you can just email me back with your question and I'll help you with that as well. Is that all right? Best we can do with sort of quite a large group. We're going to be using the slides during the session. So you might have a button, depending on your device, that says sync to presenter. If you've got that, press it, and it definitely means then that the slides should move as I move them through, but hopefully that should be the default anyway. If you do find you can move them backwards and forwards yourself, can I suggest you don't, if that's all right? Just because some of what we're talking about, it's really important that we're looking at the same thing at the same time, so the explanation makes sense. But as I said, you will get a copy of these, and you can, of course, also watch it back as many times as you like afterwards. Do ask questions. It is important that you get what you need from the session where you can. I'm hoping we're going to cover all of the basics. If I see a question come in and I don't answer it, it's possibly because I know that we're coming to that later, but I will also pause at various points in the session to give you a chance to ask questions as well. So what we're going to try and do is we're going to do a little bit of background to why we're here, and then we're going to talk about a little bit about McCloud, because that is the thing that is causing all the issues for us at the moment. We're going to talk about some timeframes, and then I'm going to talk to you about this HMRC online calculator, sometimes called an assessment tool. It's the same thing. As I mentioned earlier, if you can see at the bottom, you might see that we've got 106 slides, which is slightly terrifying prospect to get through in 90 minutes. But actually, a lot of them are just some sample screenshots that I'm going to rattle through really fast. So you can use them to go back and look at your leisure, but we're not actually going into 106 slides in that sort of way. And then I'll also finish with some reminders, which is a little bit more detail about annual allowance and also what to do if you get a pension savings statement for 23-24. Okay, so we'll get going and we'll see how we get on. Okay, so some of you may have already received your remedial pension savings statement. Some of you may not. what we're expecting is that those of you who are on this session here are here because you've had an annual allowance issue perhaps in the past. So you should be expecting to receive one of these statements, or it's possible that you've received a statement having never received one before. That we've seen a couple of those already as well. If you haven't received one, so this is what it looks like. So you can see there, I've given you a few screenshots. There's actually more pages than this, but it gives you an idea of what you're looking for. So it does say that it's your Remedial Pension Savings Statement at the top here. There's a covering letter with some explanations, and then you'll find there's some pages with some tables. So this is one of them, and this is another of them as well. Now, we've been told by the NHS Pensions Agency, so NHS BSA, that there are 57,000 of these statements that they will be sending out. So they will be going out in phases. And if you haven't received one yet, it doesn't mean you're not going to get one. It just might mean that it's not made it out the door yet. So we are recommending, rather than people keep chasing, because obviously they're quite busy at the moment, is to just wait maybe until the end of next week and see, therefore, if you haven't received one by then, chase it up with them. Okay, that's what we would recommend. I know they're a bit small on the slide, but again, when you get the copy of the slides that you can look at in your own inbox, hopefully you'll be able to see that a bit more clearly as well. So if you get your statement, this means that you have some action to take, and potentially, I'm going to come back to this later, we are going to have some quite tight timeframes to work. Been quite a bit of noise and campaign and communications from some financial advisors and the BMA and various other organisations to the government to say that this time frame is too small. So we're hoping it will change. However, at the moment it hasn't, and so I'm telling you what the current timescale is. And I'm going to go back through this with you later on as well, because it will make more sense then, but I just want to really pull out the key date at the moment. So the key date at the moment is the 31st of January. Okay, so that is one of the dates where we have to have done some of this assessment work, or all of this assessment work by. And obviously, as of today, it's the 10th of October. So it doesn't give us a huge amount of time for people to get all their information together, which we're going to talk about, and to get this assessment done. I've run this webinar as quickly as I practically could, and the reason for that is the HMRC, as I say, have an assessment tool, and they took that tool offline for a while. They created it for the McCloud. They took it offline. They were due to bring it back in July. They brought it back on the 18th of September, and then on the 19th of September they changed it, and there's been a couple of tweaks since. So we've been quite reactive to trying to get ourselves into a position where we can talk to you about this in a sensible way once we knew a bit more about what that assessment tool was doing. So I think it's timed quite nicely. The initial target for the schemes were to issue those remedial statements by the 6th of October, and they have, as I say, they have started going out, but there's quite a lot of them, so they're going to be going in batches. You can't imagine working in the mailroom on that day, can you, when 57,000 suddenly land? So we've got a little bit of time just to make sure to see if they come through. All right, okay. So now we know what we're looking at. It's this document. It will come to you through the post. It's not available on your TRS or your My NHS pension portal. So they're still coming through the post in a brown envelope that looks a little bit like it might have come from HMRC, but it's actually come from NHS Business Services Authority. So you'll see that in the top of the letter. Okay. So now we know what we're looking for. Shall we just do a little bit of a recap on the background? So you might remember from previous years, your annual allowance is the limit on the amount of tax-free pensions growth you can have in a tax year. And if you go over the allowance, there potentially could be tax charges to manage your pay. And the allowance has changed over time. So we've got a little history of the allowance here for you, and you can see it was quite high in the inception in 2006-07, and it went up, and then it really didn't. And then it's been riding at 40,000 for most people for the last few years, and then from 23-24 it's gone up to 60,000. So when we're reassessing the position for McCloud, we have to use the allowance that was in force at that time. Now, what further complicates the annual allowance for some is that if you're a higher earner, then you could be affected by something called tapering. So again, some of you may remember this from previous, you may not. Tapering really means that if your taxable income is over a certain level, then your annual allowance might be less than the standard allowance. So if we said the standard allowance was 40,000, if your taxable income breaches a certain level, then your allowance could be less than that. Okay, so all of this has to be factored in when we're doing a reassessment as a result of the McCloud remedy. And I'm pleased to say that the tool or calculator that HMRC have created does take all of this into account. But as you're going to see as we get into the session, it's not quite as straightforward as you might think. So what's happened is that the scheme are having to recalculate your pension growth figures as a result of McCloud. So let's talk about McCloud then, just to remind ourselves what this is. It's named the McCloud remedy following the primary legal case. And the McCloud remedy is all about the way in which the 2015 sections were introduced right across the public sector. So it's not an NHS pensions issue, it's a public sector pensions issue. Okay, so just to recap, when the 2015 section was originally introduced, not everybody was automatically moved into that section. And the scheme looked at a couple of different things. The first was where you were a member of the pension scheme as at April 2012. And if the answer was yes, did you then have more than 13.5 years to your normal pension age? And if you did, you would have automatically moved across to the 2015 section on the 1st of April 15, and that was a mandatory move. So you might remember that, you might see that from your statements. If you were somebody who, as at April 2012, had between 10 and 13.5 years to your normal pension age, then you would have also moved into the 2015 section, but that may have been at a later date based on your date of birth. So, for example, it could have been the 1st of April 2018. And finally, if you were somebody who was within 10 years of your normal pension age at April 2012, then you didn't move at all. You remained in your original section. So that was how it was originally introduced. And as I said, there was a long protracted legal battle about this on the grounds of age discrimination. So what this meant was that the way in which it was introduced had an age discrimination element attached to it, because when we think about our little pyramid there, people moved, or when they moved, was around their proximity to their retirement age, which of course causes a problem. So the central government, Treasury Department in central government have been responsible with devising and implementing a remedy that removes the age discrimination aspect. And that's taken quite some time. There's been a number of consultations that have been running since 2019, and there's been lots of things to consider, such as tax in a number of different areas. Okay. Now, because of this age discrimination, part of the remedy, or part of the way that we're going to fix the issue, is that people are being rolled back into their original section up to the 31st of March 22. So if you were moved into 2015, at any point before 2022, you're effectively going to have that reversed, so that you will see that you've carried on in your original section, whether that was 1995 or 2008, up to the 31st of March 2022. And if you can access your total reward statement or an annual benefit statement now, you will be able to see that. You will be able to see that your service in your original section runs up to March 22, and that is as a result of the rollback. Now, because of that rollback then, that is going to change our previous annual allowance position. Because remember, the annual allowance is all about the growth in the pension. So if we're changing how the pension was calculated for that period, it's going to change the growth figures as well. Does that make sense? Yep, okay, you're all still there, excellent. So that is why you've been issued with these remedial statements, because what these remedial statements are saying is now that the scheme has completed the rollback, we have recalculated your pension growth figures, and here is a remedial statement telling you what they are. And you'll see within the statement, you have a couple of different pages actually that reflect this, but you'll have a page here that says the new pensions input. So pensions input amount is growth. So the new pension input amounts, and on this page where you have to flip it around the other way, so it's landscape, it gives you the new amounts and the old amounts together, so you can compare them. And what you'll probably find in most cases, but not all, that overall the pension growth figures may well have gone down. Okay, so that's what the remedial statement is doing. It's telling you that from the rollback, the scheme has recalculated your pension growth or pension input amounts, and these are what the new figures are. Okay, does anybody have any questions at the moment? Hi, Alex. So Alex has said, does this mean that some that have moved because of McCloud would have been better off if they hadn't? Okay, that's a really good question. And I think Alex has asked that because I've said that in quite a lot of cases, the overall pensions input amount or growth figure has gone down. Okay, so when we calculate the pension growth, seamless, what we're doing is we're looking at the annual pension amount that somebody has built up at the start of the tax year, and we're in essence comparing that to the figure at the end of the tax year. Okay, so end of the tax year minus the figure at the start of the tax year. Now 2015 section generally year on year grows at a higher rate to 1995 as an example. So 2015 uses a fraction of 1/54th, and 1995 uses a fraction of 1/80th plus an allowance for some cash. So you can see that the fraction is smaller for 2015, and when we've got a smaller fraction, it means it's a bigger portion. Okay, so year on year, the 2015 does grow at a higher rate, but you might also remember that the 2015 you take at a later age normally. So the normal pension age for 2015 is state pension age. So where it gets rolled back into 95, it may mean that the pension has gone down because it grows at a lower rate, but you can access it unreduced from 60 rather than state pension age. So the answer to your question, Alex, is it means the pension's gone down, but there's more things to consider in that equation as to why it's gone down and actually what the overall value is. But because the growth figure or the pension's input amount is all about comparing pension at the start to pension at the end, then yes, it does look like it's dropped, but you've got to kind of look at all of the circumstances. Claire, do we trust these figures? Is there any chance that NHS BSA could get them wrong? Well, there's always a chance, Claire. I'll say that. We should be able to trust them. We should. For those of you who are on the session who we've previously done revised estimates for, we would compare, if you wanted us to look at this for you, we would compare it to the calculations that we've done to check that they're consistently in line with what we would expect. There's usually a little bit of difference, but we wouldn't expect anything significantly different. If it was, then it might be a query. The ones that we've seen so far are accurate from what we can see. Things that might cause them to go wrong is if pay figures are incorrect. But remember, we've got the pay figures already, or the scheme have got the pay figures already because we're going back over historical position. So we would typically expect that they would be correct. Yes. Okay. Alex, can I ask a very silly question in that case? I thought McCloud was meant to improve our pensions. Okay, just throwing that back, not confirming or denying that position. Who said that? Who said that it was going to improve the position? All my mates. Okay, No, and I'm being a little cagey because the reality is, Alex, for some people the rollback could be better. So, for example, if you're somebody that wants to take the pension at 58, the reduction is a lot less from 95 than it would be from 2015, and overall it could mean actually that that is a better option from having that 7 years back in 95. For some people, that might not be the case, and it's very circumstance dependent. So there are definitely people who will benefit from the rollback. There are some people who will not. But you might remember there's a second part to McCloud. So in addition to the rollback, when you, in theory, when you come to take your pension benefits, you can choose between keeping those 7 years back in your original section, or you can choose to have them calculated on the 2015 basis. And in theory, what should happen is that the scheme will give you comparison figures and you would choose whichever option is better for you. So, you know, there are some people who will benefit from it. There are some people who will benefit from the other option, and that's why you get that choice. Not a problem, Alex. Thank you for your questions. Right, I'm just ticking these off. Barry, I haven't forgotten you. I'm coming back to your question. Paula, how can I be sure that the copy sent to me is my info and not someone else's? So on your statement, if you've got it in front of you, or if anyone gets their statement in front of them at any point in time, it's obviously addressed to you on the front of the letter, and on the top right-hand corner of the letter above the date is your member number. So that should match up with your other statements as well. Now, it's all one document. So everything should be your information, because there's no reason to think that it would be anybody else's, because it's all produced as one complete document. So if you check those details are correct, then it should be your details. Brilliant. Hello, Jackie. I had a letter a few years back that I think indicated I had 1 year over the allowance and 2 or 3 either side of that year under the allowance. It was hard to understand, and so I think I worried about it for a while and then shoved it in a drawer. It's a very common response, Jackie. Never heard any more, and then I retired and returned in May, and now I recall it's starting to make me worry. Okay, don't worry. From what you've told me, I don't think you've got anything to worry about, but put a pin in it, and we're going to come back to that as we go through the session. Would a change in reckonable service affect these numbers? Yes, they would, Claire, but these numbers are looking backwards. So now that we've rolled back, I'm not sure what would significantly change, unless you're asking that you've got some service missing. And so if they add that in, would it change the numbers? And the answer is it would, but slightly. So it wouldn't be significant. And again, we can come on to changes later. Annette, just checking this discussion is of use to people like me already receiving their 95 pension affected by McCloud but haven't had anything. So this session, Annette, is about pensions tax issues and the annual allowance. So, and that usually affects higher earners. So if that's not you, then it's probably not relevant what we're talking about in the session today. Hello, Anthony. Basic question, not at all. If we joined 2015 on the 1st of April 22, what are we rolling back? As it suggests we were on 95 until that date. So if initially, Anthony, you didn't join 2015 until 2022, and that's the first time you joined, then you've got no rollback, in which case you wouldn't be receiving a remedial statement because your position has already been correct up to that date. Sally, the member number is also at the bottom of every page. Indeed, it is. Correct. Thank you, Sally. Will everyone get a remedial statement? So the scheme sends out these statements if they believe that you are either now over the annual allowance for any of those years from 2015-16 up to 22-23, or that you have previously been told that you are over the annual allowance. So no, not everybody will get it. And as I've just mentioned to Annette there, it's really going to affect usually those who earn a bit more, because it's the rate at which the pension builds up. If you haven't had one yet and you think you should have one, don't panic. As I mentioned before, they are still going out because there are over 57,000 of them for the NHS. Yes, missing service. Okay, Claire, so yeah, missing service will make a small difference, not significant. Right, Andrew, I'm going to pick up your question in, Ian, sorry, I'm going to pick up your question in a minute. Jay, I haven't had my AA statement for 23-24. No, I don't think many have, to be honest, Jay. So I'm hoping that they are on the way out. It might be that you don't need one. That might be why you haven't had it. There were some changes. One of those changes, let me jump back, was that the allowance for 23-24 went up to 60,000. And so that, along with the change to the way the revaluation is applied, means it's actually very difficult for people to go over the allowance now in the NHS pension scheme. Not impossible, it can still happen, but it does mean that just because you've had statements before doesn't mean you need one now. So it's quite possible not having one is absolutely fine. Amazing. Right, let's just do a quick summary of the what the growth is, because this is going to answer some of the other questions. So I think Barry's question and Ian's question I'm going to cover some of now. It's a really strange calculation, as we've said, and so some of you have commented already. When you look at the numbers on the statements, you have some years where it might be zero or a very low amount, and you have other years where it's enormous and seems completely incorrect. Okay, and it's because it's about the growth in the pension benefit or the promise of the pension benefits. That's what we're measuring. So we're not looking for schemes like this. We're not looking at the contributions you've paid. We're looking at the growth in the pension benefits. So what we do when we do the calculation is we take the annual pension at the end of the tax year. Okay, so as an example, it would roughly be the most recent figures on your total reward statement. Slightly not, because that doesn't quite run to a tax year, but just to give you an idea. And we subtract from that the pension amount that you had built up at the start of the tax year. But when we take the pension at the start of the tax year, we can also adjust it for inflation to bring it up to current value. So let's just say my pension that I've built up at the end of the tax year was £10,000, and my pension at the start of the tax year was £8,000. So I take the 8,000 from the 10,000, and that gives me a £2,000 amount. So that tells me my annual pension has gone up by £2,000. We then have to multiply that by a HMRC factor of 16. So Barry, it's the same factor for everyone. And really what it's saying is that when you receive your annual pension, so when I receive my annual pension of £10,000, I don't receive that once. I receive that every year that I'm alive. So it's a multiplier to kind of take account of the fact that you're going to receive your pension over a period of time. So we multiply it by 16, and that gives us our pension input amount. Now, the thing about multiplying anything by 16 is it gets quite a lot bigger. So my £2,000 that my pension had increased by, when I multiply that by 16, that gets us to 32,000. So you can see it makes everything quite a bit bigger quite quickly. The reason some of the numbers are really big is because schemes like the 1995 and the 2008 sections are final salary sections. So that means that all of the pension in the 1995 or 2008 is linked to your current pay. So where you get a pay increase, all of that pension, no matter how many years it is also recalculated. So pay goes up, pension also goes up. So when you have quite a big pensions input amount, it's usually because you've had quite a big pay increase. So maybe you've gotten up an increment point or something like that, and that's pushing it up. And that's why those amounts look like they fluctuate quite a lot, because it isn't about the overall value of the pension, it's about the growth in that particular year. Does that make sense? Does that answer that question? Great. Well done. Okay. Excellent. Thank you very much. Feeling all very reassured now. Okay. The pensions input amount that you are given on your statement is only in respect of your NHS pension. So to answer Claire's question here, if you are actively contributing or have paid contributions to another pension in any of those tax years, we need to take that into account as well, because you might have more than one pension, but you only have one allowance that we can measure you against. A bit like if you think about your income, you will pay income tax on your income, but you need to look at all of your sources of income to determine the overall rate of tax. So it's the same thing. You've got one allowance, but you might have multiple pensions, so you need to factor them all in. Melanie, please could you explain how pensions input amount for additional pension bought during the remedy period will be handled? Melanie, do you mean because of the rollback? So not some that you've bought and you want to know whether it's included, but what happens with the rollback? I might come back to that at the end if that's okay. Does what you're paying apply to the civil service pension schemes in the same way? Yes, exactly that. Exactly that, Ewan. So civil service, teachers, police, fire, judges, NHS, all exactly the same. So I have referenced NHS, but absolutely it's the same principle for all of those schemes. Glynis, great question. If we choose not to roll back and go with our legacy scheme, so if you go with the legacy scheme, that is rolling back because that means you want your benefits up to 2022 in 95, for example, or 2008. If you want to keep them in 2015, you make that decision when you retire or when you take your benefits, usually. Appreciate some of you might have already done that. And obviously this is a retrospective amendment. It doesn't matter. It's not going to change again. The HMRC have confirmed we're going to do this change to affect the rollback because the rollback is the default position and that's it. We're not touching it again after that. Doesn't matter what decision you make when you then take your benefits. The statement I received only has the data between 2015 and 2022. Do I need the 3 years before? Are you sure? Let me just double check this because I think they've got them all on there. Bear with me. They should no, they should go all the way back, assuming that you were in the scheme then. The statement on the, assuming this is NHS. So the third page, I think it is, or the page that's headed up summary page, it has them going all the way back to 2010-11. Lucy, what if your pay goes down, the locum GP here? So if you're a GP, your benefits are not final salary, they are career average. So if your pay goes down, it doesn't matter. Everything you've built up stays as it was. It's just that your pension in that year will be a bit less because your pay is less. So that doesn't make any difference. Stephanie, so does that mean with our recent pay rise, the 1995 pension growth will be affected, or is 1995, sorry, part close? So your 1995 pension keeps the link to your current pay. So where your pay is going up because of your pay awards or your revision on your consultant pay scales or whichever it is, the 95 pension will go up as well. Yes. That will be in the 24-25 tax year because that's happening from this year. Hello, Anas. I moved automatically to 2015 in April 22, like everyone else. Cash by 95 in this year, 6 years following pension age. This means McCloud does not apply, but I still have AA tax as a high earner. Is that correct? Yes, that sounds correct based on what you've told me there. Barry, in terms of this and tax, if I'm in the higher tax bracket, will retire in February or the end of the financial year make a substantial difference? I'm going to come back to that if that's okay. I'm just keen that we get through the main bits on the annual allowance because that's what you're here for. Jeff also wanted to ask what the formula is for calculating additional pension growth each year for AA purposes. So additional pension growth, it's the same calculation as this. For annual allowance for schemes like this, we will look at how much the pension has increased by, and then we have to multiply it by that factor of 16 as well. So it's the same formula. If you pay into a defined contribution scheme, such as a SIP, private pension, AVC, anything like that, then we don't have to do this complicated calculation. Your pension's input amount or growth is just the contributions that have been paid, including any tax relief. So it's a little bit more straightforward, and I'm going to come on to that as well in a moment. Lorraine, I'm coming to that, if that's okay. Hello, Anne. On page 4 of my statement, the pension input amount states 14,129, but on the summary page 6, it states 48,082. Are you definitely looking at old and new, like comparing new and new, or are you looking at old and new? Just check the headings, just to check that you're definitely looking at the right sections and the right years. Just double check that because it's quite a confusing document. If you want, I can have a look at it for you after the session to see if I can spot why it might be different. Okay, so moving on, just because we've got some questions that this links to. If you have an excess, so that means that if your growth in your pension benefit is more than your allowance, that's an excess. So what we need to do is take our input amount or our growth, deduct our allowance. Okay, if you are, under your allowance, then you won't have any tax charges to declare and pay, and that may have been the case in previous years. If you are over the allowance, you can make an adjustment for something called carry forward. And what carry forward is that you can look at whether you had any unused allowance from the 3 previous tax years. And if you have, you can carry that over now to offset where you've gone over the allowance. So yes, so some of you are saying that you exceeded the allowance in 1 year but didn't have any tax to pay. It's probably because you had enough allowance from earlier years to offset that. If, however, you haven't got enough carry forward, then you would pay tax on the excess that is left. And that is at your highest rate of income tax. Okay, so it's added to your taxable income, the excess, to determine the rate of tax. And that then determines the annual allowance tax charge due. Now, this is just a recap for you to talk about what's happened to you probably before. Okay. So, because of McCloud, as we've said, we've now received some remedial service statements. So that means that we have received, here we are, a remedial pension savings statement, or there'll be one on its way out, and you need to take action about that. Okay. Now, HMRC, as we said, released a calculator in September that they then proceeded to amend 8,782 times between now and then, but I think we're good. And you should now have received your remedial service statement, if applicable, or it'll be on its way to you. So you need this document to be able to use this calculator to reassess your position. Now, the good thing about this calculator is that it does a lot of the work for you. It will take your information that you input. It will calculate your allowance if it was reduced due to tapering. It will use the information to work out your carry forward position. It will then determine if any tax is due. It will then tell you if you've under or overpaid tax, and it will automatically link with the scheme to adjust any scheme pays. Okay, so this tool actually has been worth waiting for in a lot of senses because it's going to do a lot of the work for you. So whilst I've talked about this is the calculation and this is carry forward and this is this and this is that, that was just a recap for you to put it back into your heads as to what we do. Actually, this calculator is going to do a lot of that for you. There are a couple of snags which we're going to talk about next. The first one is, at the moment, as I mentioned, we've got a deadline for most of this work to be complete by the end of January. It's not long, is it? That's a concern, and we are hoping that it is going to be extended, but we don't know that yet. So at the moment, I've got to tell you the deadline is probably 2025, particularly where you might have underpaid any tax in a tax year. If you've only overpaid tax, then there is a deadline which is much later, which is 2029. But you might not know whether you've under or overpaid until you've used the tool. So really what we should be doing is trying to get through this as fast as possible so that we can make sure we meet the deadlines that have been set. As I said, we are hopeful that they're going to be pushed out, but this is where we are at the moment. Okay. So the key thing is these calculators that are available to you. Okay. So are we all right with that? So we've done a quick recap. we've kind of reminded ourselves a bit what McCloud is. We know if we're affected by rollback, and so if this is us, we know that it's a horrible calculation that nobody really likes, but we also know that there is a tool that we can use to do that with. Okay, everybody relax, we're all right. Jackie, HMRC don't know. So normally with an annual allowance charge, they would expect you to tell them through the self-assessment process, but only if you've got tax to pay. If you've got enough carry forward, you don't need to tell them anything. So you can just put it in the drawer. It's only where you've got tax to pay that you need to tell them. Yes, Lorraine, I'm going to come on to scheme pays. So let's talk about HMRC for a minute. Okay. I'm going to show you some screenshots, okay? Now this is where a lot of 106 slides are coming in, and so I'm not going to run through all of them. I just want to give you a flavour for what it is, okay? In order to, I'm just going to show you a summary page. So you won't see this page straight away. But what this is giving you an idea of the amount that you're going to have to input potentially. Now, Caroline, I think it was Caroline, says that she started using the tool today and it said she had nothing further to do. That means you'll have done part one of this, which is known as the setup questions or the triage. So it's probably right, Caroline, because what it's doing is it's saying, did you have a tax charge to pay before? I'm presuming that was probably a no. And then it's looked at what the information you've input at the triage, and it's going, oh, well, you still don't have one because it's worked out you've got enough carry forward, so you don't need to do anything. So you run the triage bit first, which I'm going to show you in a second, and then it will go no if it doesn't need you to do anything else. If it does, it goes, please continue. So I'm completely think that's probably okay. So that's really good. So what you do is you go into the tool and you go through a series of setup questions, or triage as it's called. And they look a bit like this. Now, it's quite possible, Caroline, yours may have looked very slightly different to this, because, as I said, they've changed some of the screens a bit, but I think this is the latest version. So it's going to ask you if you've been informed about using the tool, and you will probably say yes, because you have received your pension savings statement. Okay. So this is just this initial triage it's going to do. It's then going to say, do you want to sign in using your .gov gateway? Right, you don't have to. You can continue without signing in, or you can sign in. If you continue without signing in, it will time you out and does not save the results. So you might want to sign in. If you're doing it yourself, I'll come back to that in a second. Do you want to overwrite a previous submission? Let's assume no, because none of us have done this yet. Are you affected by the public service pensions remedy? So it gives you a summary there, but basically for you it will be yes. Because obviously if you say no, it's going to say, what are you doing using this tool then? Have you received a pension savings statement? Yes or no? Were you a protected member? So some of you asked me about that already. So the protected members are those people who didn't move anyway until the 1st of April 2022. So you'll go through a series of questions, and it will then, and it also asks you, this is probably what Caroline's done today, did you pay any charges? Have your pension input amounts gone up or down? And then it goes, and then it will come up with, as it probably did in Caroline's case, you don't need to use the service, something like that. So what that's saying is basically it says you didn't have any tax to pay before. The amounts have gone up or down, probably down. So therefore you still haven't got any tax to pay. So therefore you don't need to do this assessment because there's nothing to tell HMRC because there's no tax. Okay. But you have to go through those initial steps for them to determine if that is the case. If you have paid tax before, then you might have some tax to pay now. And that is when the assessment is required. Okay. So are you ready for this? It's going to ask you, were you ever a Scottish taxpayer? It's going to ask you, did you continue paying into your public sector pension scheme? I'm deliberately going through this really fast. Do you have any other pensions that you pay into? Did you pay any tax charges between 14 and 15? Did you pay any between 10 and 11? 11, 12, and you get the idea, and so on. And it will go all the way through, and then it will go, okay, please carry on, do some more. So then it says, were you a member of more than one public service pension scheme at a time? So in the periods, for example, you might have moved from civil service into the NHS. That would mean that you were a member of two during the period. So we need to look at that. What is the name of the pension schemes and the tax reference number? You can get them off your statements. Revised pension input amounts. So this is the amount that is on your statement from NHS Pensions or whoever. What are the revised amounts? This is for 2015. Did you pay an annual allowance tax charge in 15-16? Have you paid in any other pension? Yes or no? If yes, what was the amount that you paid in? What was your taxable income in 15-16? Did you claim any tax relief? What tax relief did you claim? Do you know your personal allowance? This was all from this one tax year, by the way. Do you know what your threshold income is and your adjusted income? Did you claim blind person's allowance? Do you pay any payments to trade unions and so on? Right, so you do that, you can check your answers, and then you repeat for every single tax year. You've got to fill in all of that information about your taxable income, whether your adjusted income, your allowances, your tax reliefs, all of that you need to fill in the calculator, okay? Because you've got to do that across all of the tax years affected, it is over 200 fields that you have to fill in. Remember, if you don't log in through your .gov gateway, it's going to time you out. So it's quite an extensive piece of work. When you get to the end of it and you've done it all, you can click calculate and it will check about who paid your annual allowance charges previously. Was it you? Did you do a scheme pays? Was it a bit of both? Give them information. And then it gives you the calculation results in a PDF format. Okay. If you've logged into your .gov gateway, you can then submit that directly. Okay. If you haven't, it's going to time you out. So it'll give you the option to sign in again at the end if you've done it fast enough. Okay. It's quite a significant piece of work and you need to get quite a lot of information together to do this. I've deliberately gone through that really fast because there are things we can do, and that's what I'm going to tell you about now. Okay. Webinars, this is where we are here. What you can do is you can contact HMRC and you can ask them for a data extract that gives you all of the information that you need to put into that tool. So you can ask them and it will include your tax relief, your tax code, your income tax threshold, all of that information you can get on an extract from HMRC rather than scratching around trying to find pay slips, self-assessment returns, all that kind of stuff. It does take them, so they've said, 4 weeks to provide that. So I've had people going off now, some of you are on today and you are sending that request away now because I'm saying it's going to be 4 weeks before we get that back. So you need that. You need your remedial statement, okay? We would also ask you for a couple of other bits and pieces because we just want to double check some extra things as we're doing it. Things that you should have like scheme pays and other pension schemes. Once you get that information, you can then use that to input it into the tool yourself if you want to. However, what you can also do is have an agent do that for you. And if you have an agent do that for you, you can claim the costs back from a cost claim back scheme that the pension scheme is running, because one of the elements of the McCloud remedy is that you should not incur any direct financial costs that are caused as a result of the remedy. So you can ask an organisation, it could be us, there are other organisations out there, it could be your accountant, to do this work for you, fill it all in for you, submit it for you, blah, blah, blah. And we would charge you a fee and you can claim that fee back. Okay, I can see all the questions coming in, but I'm going to cover some of them off. So I'm going to come back to some of those in a moment, but that is the theory. Okay, so you can now, if you do use our service, and I'm going to go through the process with you at the end, we will ask you to request the extract from HMRC. But we will give you the email address, we will give you the partially completed form that you need to send them, and we will give you an email template to use, so you just cut and paste it in. But we need you to do that, and the reason for that is because if you remember what I said at the start, 57,000 statements have gone out. We are all going to be a little bit busy, and so what we need you to do is to get that bit of information and send it to us at the same time as your remedial statement, and then we've got everything at once that we can then use to do this for you. If everything's coming in piecemeal, or we request it from HMRC for you, they have to ring us to tell us they're sending it, and we can't manage hundreds of phone calls from HMRC when we need to be doing your assessments. So we need to work collaboratively to do this, but we will give you what you need to make that request, and then once you get that, we can then do the rest for you. Okay. You don't have to, can do it yourselves. It's there, it's publicly available for you to do yourselves. It is not a problem if that's what you want to do. Just be aware of the information that you're going to need to be able to do that. Okay. Faye, is the data extract different to the RSS? Yes, so the RSS is the remedial statement that the pension scheme has sent to you telling you the change in the pension growth figures. The data extract from HMRC is giving you all of that other information that was asked for on the slides. So your tax code, your taxable income, did you claim any tax relief, what other pension scheme contributions were, have you got a scheme pace, have you got this, have you got that? That is all what you're going to get from HMRC. So you don't have to go back through 9 years worth of self-assessments and P60s and whatever else to find that information. They're going to give it to you because they've got it all, which does sort of make this process a bit ridiculous because they've already got it, but this is what we're going to have to do. Okay, so the Remedial Pension Savings Statement comes from NHS Pensions. It's headed NHS Pensions. It's an NHS Pensions letter. The extract from HMRC, you need to request that. They're not going to send it to you automatically, and they're going to send you basically a spreadsheet with some information on it. Okay, so I would say, Stephanie, yes. Request, if you think you're going to need to do this, request that extract, because if you get it and you don't need it, it doesn't matter, does it? But if you need it and you've got to wait 4 weeks for it, you need to be getting those requests in. So they have said 4 weeks. We will see. Okay. So Claire, so am I right in thinking if I don't get the continue screen, I don't need to do all these steps? Exactly. If you do the triage bit at the beginning and it says, oh, I didn't pay tax before, and my pension input amounts have gone down, you're not going to pay tax now, are you? So therefore you don't need to continue because it's telling you don't need to. So long as you filled that in correctly, that is right. Can you do the HMRC tool a bit at a time, save progress and come back to it later? I believe yes, if you sign into your .gov gateway, but I'm not 100% on that, Kapil, because as an agent, we can't sign into your gateway. So we run them all independently and then have to submit them in a different way. So I'm not 100%. If I have every payslip P60, do I still need the extract, Astrid? So it depends on your circumstances. Do you have any other income? Do you know what the tax codes were? Do you, I'm trying to think, did you pay into any other pensions, anything like that? If you're quite straightforward in that sense, then no, you probably wouldn't. You could probably do it on the P60. It also asks you 9 times, have you claimed the blind person's allowance? But there you go. Praying for a miracle. I started on Saturday. It says it saved progress. There you go, Sally. Thank you. I thought it did. I thought that was the point of logging in. So our fee, can we definitely claim the cost back? I've seen that you may be able to claim back. Yeah, well, I use the word may quite a lot, Janice. So the cost claim back scheme says that you can claim back up to £1,000, including VAT, for support with this assessment tool. Okay, so if somebody charges you more than £1,000, then you probably wouldn't be able to claim all of that back. So it says it's very clear, up to £1,000, including VAT. If, for example, you needed some help doing the triage part of the process, and we determined that you didn't actually need to do the whole thing, you couldn't claim £1,000 back because it's not £1,000 worth of work. But NHS Pensions have said they would accept a smaller fee. So if, I don't know, say we charged you 125 quid because we said, all right, no, we've got this far, we don't need to do anything else. You could probably claim that back because that would be reasonable. Okay. Our fee is probably the same as everybody else's fee, or very similar, is £825 plus VAT, which is £990. So it puts you within that £1,000 limit so that you can therefore claim that back. We will also give you a partially completed cost claim back form for you to send to NHS Pensions when the work is complete. Okay. So this, so how do you request it? I'm going to come on to that in a second. Yes, I'm going to come on to that. Is it easy to claim the agent feedback? I believe so. You claim it back from NHS Pensions, as I've mentioned. I don't know if that's Linda or Adrian, or Linda and Adrian, both the Watsons. You send it goes to NHS Pensions. There's a process to do that. You have to send it to NHS Pensions with a receipt to say that you've paid our fee, and they will then pay it back. We've done some successful cost claim backs for other work, not this work, and they've gone through quite quickly. So we would envisage that this would be the same. Sarah, would we then still do our own HMRC self-assessment, or do you do that? So this form is instead of amending the past self-assessments. So we don't touch the past self-assessments. It's instead of. That's what it's doing. The HMRC don't want everybody to resubmit 9 self-assessments. They don't want that. So the form is instead of. You will still need to go on and do 23, 24 self-assessments as normal if you would do one. Okay. Yes, you can send us biscuits, Jackie. We're always willing to accept biscuits. Neil, will SPPA also refund the cost? Right, we believe so, Neil. SPPA haven't released their specific rules around the cost claim back scheme yet, as in England has. So you should be able to, but we don't know if they're going to set a cap and if it's the same cap, etc. That's the only thing we don't know for SPPA at the moment. Nikki, MOD, we will repay. That comes under Civil Service Pension Scheme. However, I think they're going to come to challenge on this. Their fee that they've set, there's no formal guide about this yet, but I have spoken to the Cabinet Office, is £500. And I think they're going to get a lot of pushback on that because nobody can do this work for £500. Our military should have a cost claim back scheme, but again, we'd have to check what that was. Okay, coming back to the PSTR numbers in a minute. I'm coming back to how we do the service extract in a minute. I've done the fee. What's the data extract called? How do you request the extract? I'm coming to that. Where do we find it? Yes. Faye, I'll do your question. Once completed, will it automatically adjust the scheme pays that are already in place? Yes, it does. What it'll do, I mean, it doesn't automatically adjust them. It will tell the pension scheme. So it's going to communicate with NHS Pensions and say, oh, Faye had scheme pays for £2,000 in this particular tax year, but it's now only 1,000, so change it. So yeah, it will automatically do that as part of that process. Annie, what if you weren't required to complete a self-assessment for some of the tax years? You won't have any of the data required. HMRC will though, Annie. So if you do self-assessment, the reason you do a self-assessment is because you've got something extra to tell HMRC. So if somebody has to do a self-assessment, it might be because they earn over a certain amount, they've got second income, they want to claim tax relief on certain things. If you don't have to do a self-assessment, you're PAYE, and all your tax codes and your taxable income, they still know, because at HMRC have that. It just means that certain things where we're going, for example, did Annie have any tax reliefs in that year? It will just say no. So you can still request the information. It's still absolutely fine. Okay, good. Right, sorry for the pause. I'm just checking the questions because there's a lot. Linda and Adrian, presumably if it calculates I owe more tax now, I'll get a tax bill, and if I've already paid, I'll get a refund. Yeah, okay, so what it'll do is it'll give you a results page. Let me show you, because I think we might have skipped past that quite fast. So this is an example of the calculation results. So it shows you any increase in tax charges, any decrease in tax charges, are you owed any compensation for overpaid tax, and updated. So it's sort of summarized. So it does the calc here and then it summarizes it here. So in this example, the tax charges have gone up, some of them went down, there's some compensation that's due perhaps for interest and things like that, and it does the calculation itself. So yes, it will tell you if you owe more or if you're not. Again, if you owe more and you've done a scheme pays, it will automatically assume you want to use that scheme pays and make the amendment. You can change that if you want to. And if you've paid directly before, it will say, okay, you now owe us the tax, and you can choose to pay directly again, or again, there'll be a process to put it through scheme pays. That bit, as in if we want to change to using scheme pays or not using scheme pays, we don't know what that exact part of the process is yet. We think it'll be a form to fill in for NHS pensions. But where you've already got scheme pays in place and you're just continuing on the same basis, it will automatically adjust it. Do you get a calculation result for every year? Yeah, you'll get a calculation result like this, and it kind of breaks it down as it goes through. And you can PDF that. You can save that as a PDF as well. They will owe you, because remember what we said at the start is that a lot of the figures have probably gone down, so you'll probably find that you are owed. And scheme pays and they will just adjust, but if you pay directly, you'll be due a refund, and they will pay interest on that at a rate of 8%. Okay. Those of you saying you've got two PSTR numbers, yeah, we know. Just put one of them in. It doesn't matter which one. The HMRC know that they're both for NHS pensions, so don't worry about it. Just on the subject of biscuit, I'm gluten-free, everyone, just so you know. Okay, right, going back to the other questions. Right, I'm coming on to that now. So Anthony, for those of you who might not be able to see, has asked about the compensation scheme in 1920 in England. Let's just do some of that. So I've got some reminders for you. Okay, so the reminders that we've got are that we've got some years that are classed as out of scope and some years that are in scope. So the out of scope years are 15-16 up to 18-19. So what that means is if when we do the assessment tool, it determines that you hadn't paid enough tax in any of these years, you're not required to pay the extra because they are too old and have fallen out of scope. And it's not your fault. So HMRC, write that off. If, however, in any of those years you've overpaid tax, you will, of course, get a refund with that 8% interest that I mentioned. The scheme years that are in, or the tax years rather, that are in scope are 1920 up to and including 22-23, actually. So 21-22 and then 22-23. If you've underpaid tax for those years, you will have to pay any shortfall. And again, if you've overpaid, then they will be refunded. Again, the calculation does all that for you. Now, as Anthony has just said, 1920 in England, for clinical members of staff, there was a compensation scheme that ran, which meant effectively if you had a tax charge in that year and you use scheme pays to pay that tax charge, NHS England effectively refund you that tax when you take the pension as an extra income amount. This has to reopen as a result of this. So again, if your tax goes down, it will just readjust down. It will readjust the scheme pays down and it will readjust the compensation automatically. If it goes up, it will readjust up. If in the very rare scenario, you find that you've got a tax charge in 1920 and you didn't have one before, then you should be able to that point apply for the compensation scheme because it wasn't available to you originally. Clinical includes clinicians, so it really is consultants and doctors. It's not nurses and it is not management, unfortunately. Also doesn't extend to Scotland at all or Northern Ireland. Okay, just like to point out at this point, I don't make the rules. I just tell you what they are. Okay, so if you're confused because, for example, it says you've underpaid tax in 16-17, but it's not asking you for any more, it's because you're not required to pay it. Excuse me, because it's out of scope. But for these other years, you will be. So that's quite nice, isn't it? So what will happen is when they do the calculation, they'll work out the overall position. They'll work out the position for each year, and then they'll kind of, for any refunds and stuff, they kind of lump it all together and work out any rebates and the interest and so on that. Okay, right. So 23-24 pension savings statement. I just want to talk about this and recap on a couple of things before we then go back to the process itself, because I know that's what you want to know about, but this is just important as well. I don't have a screenshot of one because I haven't seen one yet. And the reason I haven't seen one, I think, is what I said in answer to Jay's question earlier. I don't think a lot of you are going to get them for 23-24 because the allowance has gone up and they made a slight adjustment to the calculation in returns of revaluation in your favour. So that does mean that you have to have quite an event for them to be a tax charge or an excess on the allowance for 23-24. The other thing that they do with the revaluation is, do you remember when we were looking at the slide at the start and we said we take the pensions input, sorry, no, we don't. We take the annual pension at the start of the tax year and we increase it by inflation. The inflation that they use for the 23-24 tax year is the inflation rate at 2023, which was 10.1%. So even though people might have had pay increases in 23-24, they're generally not going to have been at a rate of 10% for that year. So actually what it means is that most people are not going to get anywhere near their allowance. So the fact that you haven't had a 23-24 statement will probably tell me that you're not due one unless you've had some sort of waxing pay increase in that year. I would say you're probably not going to get one. Okay, but if you do get one, then just remember that you are going to have to assess whether you've got any carry forward from your previous tax years that you can offset. You also might need to assess if you've got a lower allowance. So at the moment, your allowance would be reduced if your taxable income was over 200k. So if you've got a lower allowance, you might need to check that as well. But remember, you can use your carry forward if you've gone over the allowance. And then if you do have any tax to pay, you need to put that on your 23-24 self-assessment. It's a totally separate thing. And you'll have to make the decision about whether to use scheme pays or pay it directly. So let's talk briefly about scheme pays, because that might also be a decision that you have to make if you now find that you've got a tax charge. Scheme pays are like Marmite. Well, I talk to people about this. Some people really like it, some people really don't. It's very much whatever suits your circumstances. Okay, just need to understand what it is. So it's a mechanism where you can ask the scheme to pay your tax charge for you. So let's say Lorraine's got a £5,000 tax charge. She might not want to pay that. She might want to go on holiday. So she can ask the scheme to pay the tax for her, and they will do that. And then what then happens is interest is added on to that amount. And then when Lorraine then retires and takes her pension benefits, her annual pension is adjusted by a smaller amount to take account of the tax. So for example, if she's got a tax charge of £5,000, see, I knew you'd go on holiday, it might deduct £275 a year off the pension, as an example. The exact amount depends on the age that somebody takes their benefits, but just to give you an idea, that's the scale that you're talking about. That £275 is deducted forever. So if Lorraine lives to be 122, she will probably have paid back more than what the actual scheme pays cost was. But the converse is also true. So if she sadly drops dead 10 years into retirement, she won't have paid all of that back, and neither does anyone else. Scheme pays does not affect the dependent benefits, and nobody's asked to pay that in the event of your death. It also is deducted from your pension before pension income tax is calculated. So if you're a 40% taxpayer, it takes about 30 to 35 years of receiving the pension before you've effectively covered the cost. So you can factor that into your equation. It's just a case of weighing up, do you want the money now? Do you have the money now? Versus paying it through scheme pays. If you do pay directly, you're paying that on tax that you have already income, sorry, that you've already paid tax on. So just be aware of that as well. So it's just a case of working out whether you want to do a scheme pays or pay directly. There is a scheme pays fact sheet you can look at, and some factors as well, so that you can have a little go at working out roughly what you think it might be. Unknowns, of course, are things like the interest, but it's all about personal circumstance and what you think will work better for you. So again, we're talking about this in respect of the unlikely event of 23-24, but for those of you who may now find that you've got a tax charge as a result of the rollback, it might be something that you need to consider whether you want to pay directly or use the scheme pays option. Annie, scheme pays, does this only apply for those still in employment? I'm retired, so presumably I have to pay. And I don't think so, Annie, no, because you shouldn't be disadvantaged as a result of the rollback. That's kind of the whole point of the remedy, is that you shouldn't be put in a financial disadvantage compared to if it had been done correctly the first time round. So scheme pays can still apply. The thing to remember, though, is because it's deducted from the pension from retirement date, you might have kind of arrears of scheme pays that would be owing, and that would be something to possibly consider as well. Okay. Let me just move to process in a second. Let's have a look at questions. Hello, William. What about the 22-23 pension savings statement? Have they been issued already, or are they on the remedy statement? 22-23 is included on the remedy statement because they didn't go out in 22-23 for those of you affected by the rollback. Because they couldn't, because it would have been incorrect. So it's all included on the remedy statement, and there was obviously that extension that HMRC gave to declare any tax, so that should be included. 23-24, as we mentioned, is effectively now, so that's a separate statement that you may receive because that's current, but anything from 15-16 up to and including 22-23 is included on that remedy statement that we looked at the start. Okay, just having a look through the questions. What if you are over in the out of scope years but never had to pay tax then? Then again, Lorraine, as I mentioned before, it falls into an out of scope year. And does the out of scope years mean that if we now determine that tax would have been due, you are not required to pay that because it's in the out of scope year? So the only thing about the out of scope years is if you have overpaid tax for one of those years, you will get that refunded back to you. But if you've underpaid, you are not required to pay. If you don't want to roll back your legacy pension scheme, then I guess you don't need to do all the calculations. Incorrect, Rita. You don't get a choice at this stage. So the default position, what has happened already is that rollback has happened. So if you look at your pension statements, it will have automatically rolled you back into your original section up to 31st of March 22. That's happened, and that's why we've got the remedy statements coming out. There's not a choice at this stage. If you then choose to have the other option when you take your pension benefits, so pension from 2015 to 2022 from the 2015 section, it does not change this revised annual allowance position. We don't recalculate it again, but you will have to do a reassessment if applicable because everybody has been rolled back as the default position, so you will need to do that. Jay, will a previous scheme pays amount be adjusted down if the recalculation shows that I did not have an AA owing? Yes, it should be. So the process through the HMRC assessment tool is that where somebody already has a scheme pays in place, the HMRC will communicate with the pension scheme to adjust that scheme pays up or down accordingly. That's the kind of, again, the default position there. Laura, if HMRC applied interest penalty payments for late declaration of breaching AA, should I get these back and late payment fines? So that's an interesting. So in that question, Annie, do you mean that you originally declared late and therefore received interest and penalty fines the first time round, or are you saying that you might get an interest payment, late payment now? Yes, you didn't run. Right. So you could try, but I'm going to suggest they'll probably say no on the late filing fee. So you get a late filing fee and then you get interest. So your obligation is to make sure that you file correctly at the right time. So even though that was on information that we thought was correct then, because you did it late, I feel that they'll probably still say that that fine will stand. They might look at reimbursing or compensating on the interest because in theory that actually wasn't due, but it's the filing. I think they'll probably say it was late. Paula, is there a way to appeal if we think any year looks odd or query why the value is much different in one year to all the other years? 21-22 amount is quite different. Okay, so Paula, you can, right? But we did talk about this at the start. So just to recap, in 21-22, if it's a lot more, did you have a big pay increase? Did you go up an increment point or move up your band or anything like that? Because remember, what we're looking at with these figures is the increase in the pension. It's the growth. And where you've got final salary benefits like 95 and 2008, when your pensionable pay goes up, it recalculates all of the pension in that section of the scheme, which pushes the pension up, which is really good. What it does mean, though, is in those years where pay jumps up, your pension input amount can look quite a lot more because it's pushed it all up in that year. Similarly, it can be quite a small amount or sometimes zero if perhaps the pay increase hasn't been at the same level or less than inflation. So they do fluctuate because it's about the growth in that particular year, and there's those different elements that affect the growth. Did change jobs on the same post. So is it lower, Paula, or is it higher? Higher. Yeah, it might be worth looking. If your pay didn't really change and it's quite a lot higher, it might be worth having a look at it. It might be one to send. Yeah, that's quite high. Yes, I would possibly query that then. If you want, Paula, you can send it to me after the session and I'll have a quick look to say if you change jobs, I feel like something might have doubled up somewhere, but it's definitely worth having a look at that. Lorraine, still not clear at the out of scope years. I am over in those years and wasn't before, so I've never paid tax. Would I now have to pay it for out of scope? No, Lorraine, because it is out of scope. If we are out of scope in those years, we do not have to pay the tax that it now says is due. Okay. Right. Hello, Janos. This is a painful process every year. Should we consider reducing work income to avoid this unfair tax or net, or are we losing out on pensions tax? So I have noticed, I hope he doesn't mind, that we have a special guest who has turned up, if he's still here, which is Tony Goldston. Are you here, Tony? I'm going to see if I can find you on my list. You are. Tony might have a view on this. I personally would say it is a painful process and it's quite admin heavy. I would say, Janos, this is the worst of it. What we've got now is to do this kind of remedial work to fix it. I think the message, though, is that some of the changes that were made last year have really helped. So, for example, we've got a higher allowance. So the allowance is now 60,000 instead of 40,000. We've also had an adjustment to the inflation calculation, which makes quite a difference. So on a typical year-on-year basis, I wouldn't expect that many people to now have to keep paying annual allowance charges. I feel like it should probably settle down. Not all of the problems have been removed. Certainly for those earning over 200,000 and might have a tapered allowance, perhaps potentially if you're paying into another pension as well, or you have a very big increase in a year, that could potentially give somebody an excess allowance. But I think generally speaking now, we wouldn't really expect to see this on a year-on-year basis that we have done before. Okay, right. Shall we move on? I'm conscious of time. Shall we move on to process? So as I mentioned to you before, I'm going to come back to the divorce question, by the way. I haven't forgotten. It just doesn't fit to where we are at the moment. Okay. You can do this yourself. It's a public tool and you can do it yourself, and that's absolutely fine if you want to do that. You can do the triage part of the process, as we mentioned, and for some of you, so the rule of thumb is if you didn't have tax to pay before and your pension input amounts have gone down, then you're not going to have tax to pay now. So the triage process will kind of cancel you out of that, and you can probably do that bit yourself. That's absolutely fine. The rest of it is quite extensive, as we've seen from the screenshots. There's quite a lot of things to fill in. And I think, as I said before, there's around about 200 fields to kind of fill in with something, either a yes, a no, a number, or a zero. You've kind of got to fill all of those things in. And it's going to take quite some time to do that and to get the information together. So we can do it for you, as can other organisations. And in the spirit of fairness here, I'm going to name some of them because there's such a lot to do with all of those statements that have gone out. So we can help you. You've got Mazars, who's Tony's working with. They can help you. If you've got a medical specialist accountant, they can probably help you. I can't speak for all of them, but probably. MediFinTech with Graham Crosley, they can help you. So, and I think some financial advisors can help you as well. So look at who you're working with at the moment to consider whether you want to get some additional support from all of those different areas. Tony's put his hand up, but I can't. Oh, if I make it presenter. Tony, can you speak? Hang on. You're on mute, Tony, but I think you can mute yourself now if you want to say anything.
Hi, Laura, can you hear me now?
I can. Hello, welcome.
Thank you. Yeah, I mean, just picking up the question before about do you decrease work? I mean, I think everything has changed a lot because the position that we were all in 3 or 4 years ago is really different because we've really lobbied hard to get things changed and things have moved massively. And as Laura said correctly, the two biggest changes are the general annual allowances, obviously, really lobbied hard on a change in the rules. So the change in the rules has meant that the way that it's calculated is different now. So Laura mentioned about if your pay goes down. Now, previously, when your pay went down versus inflation, the government just basically stole that and zeroed it off. And now that is offset against your 2015, and that's going to happen to a massive extent for consultants in particular for the 23-24 tax year because our pay was massively eroded that year. So we're all going to have big negative numbers for the first time in 23-24. And so very few people are going to run into a problem in that tax year. I think the group where it's still a big problem is the tapered group. The tapered annual allowance is still a really bad tax. It's still got a ridiculous, stupid cliff edge in it. And if higher earners, flip over that 200,000 level, then it can just be ridiculously punitive. And some of those people would, be in a better position by doing less work, which is just a crazy position. And we're still really lobbying hard with government on that. But in general, the position that we were in 3-4 years ago, where lots of people could get a better pension by going part time, that ridiculous position is no longer there because of the changes that have come about. Thanks.
Thanks, Tony. I think you missed it as well. I was just talking about, so the earlier part of the session, we kind of rattled through all of the fields that people will have to fill in on the HMRC assessment tool. And I was just saying, we can do that. But in the interest of fairness, there are actually lots of people who can help with this because there's going to be quite a significant volume of them. So I've mentioned the work that you were doing with Mazars. I've mentioned Graham. Obviously, we can do that as well. And I think you can do it yourself if you really want to. But the thing that we know is that when somebody completes the tool for you, does the assessment work for you, you can claim the cost back through that cost claim back scheme before. So you will still have to pay the fee, like in all likelihood yourself, but you can then look to claim that back. So that is something that you might want to consider. And also, as I mentioned before, if you've got an accountant, particularly an AISMA, so a medical specialist accountant, they may also be able to help you with this as well. As I mentioned before, the maximum fee you can claim back for completion of the assessment tool is £1,000, including VAT. So that's something to bear in mind as well, and that's across the NHS. I know we've got a couple on here from other schemes, and as we mentioned, they either haven't published their guidance yet or the amounts are a bit lower. So in terms of the process, because I know you're all asking for this, our process, if you choose to come through us, looks a little bit like this. So we will send you some information. So you can make an inquiry through our link on our website, and we will send you lots of information. And with that information, we'll include how to request the data extract from HMRC. It will include a template email. It will include the partially completed form that you need to complete and send to them, and it gives you the email address. We will give you that regardless as to if you then choose to proceed with our service or not. So you make the inquiry, it will automatically send you some information, and that is included within that. It's probably easier to do that way than trying to explain to you how to request it. But essentially, there's a form, it's called a PSPR form, and you fill that in and you send it to HMRC to a specific email address, and then they will then email you the data back in a form of what they're calling a data extract. Essentially, it's a spreadsheet. As I said earlier, the HMRC are saying this will take up to 4 weeks. We have had requests going off since last week, so we will wait and see. how long that takes, but we've been told it will take about 4 weeks. Now that time frame could push out if they get a lot of requests, which I'm sure they probably will do. So we just need to keep that in mind. Now, remember, as I also mentioned, at the moment, the main deadline for this work is the end of January. So if it's going to take 4 weeks to get this back, it's starting to look a little bit ridiculous. But also, as I said, there are campaigns and requests to extend that deadline. So we really hope that it will be, but no formal confirmation of that yet. So we're currently working to what we know. If you do want to then proceed to use our services, when you get that data from HMRC, if you send that to us with the Remedial Pension Savings Statement and a couple of other bits and pieces we ask you for, we will then be able to do the analysis and fill in the assessment and for you and do all that for you, and we will then submit that to HMRC on your behalf, and we will send you a copy of that so you can see that it is all gone and what has happened. And we will also cover there whether scheme pays is going to automatically be amended or do you want to do something different. We will then invoice you, because unfortunately that's the way that business works. But we will also provide to you some wording and a partially completed cost claimback form, which you can then send on to NHS Pensions to claim that feedback with a receipt. So you will need to contact us for a receipt as well, because they do insist on that. And that is kind of how that process is going to work for you. And I can't speak specifically for other organisations, but I would suspect their process is something similar along those lines as well. Okay, so you can contact us through our website, and we'll send you the details of how to request the extract, the form that you need to fill in and all that information, and then you can use that and then just do it yourself, or you can use that and then ask us or ask any of the other advisors who can support you with this to do that as well. As we mentioned, there's a lot of them, so everybody's going to be very busy, I think. Perfect. Just very quickly before I come back to the questions, when I send the slides around, there's a link there to the cost claimback scheme that I have been talking about, so you can see what that is and the rules. There's a link to the Public Service Pensions Remedy section on the BSA website. They've also got a little section that talks about the rollback on the annual allowance, as we discussed at the start. And then if you do want to get that information, you can click our contact form, which is here. And then it asks for some details, and from the drop down box it says what do you want to know, and the first one is annual allowance. So if you select that, it will then email you back with those details that we asked you for. Okay. Right. Let me see questions. So people who are not impacted by McCloud don't need to fill forms or use the agent. So if you are not impacted by rollback, Annes, then no, you don't need to do any of this. These remedial statements are just for those impacted by the rollback. You have a look. If you are a nurse, hi Barry, what sort of income level are you likely to be impacted for potential additional tax? It used to be, I mean, it's not just about the income level, it's also about what happens to the pay. So we used to say to people, if you used to earn around about 80,000 and then you kind of moved up a level, that potentially could give you an issue if you had lots of final salary service. So those sorts of numbers are what you might be looking at for past benefit growth. Also depends on whether you're paying into another pension scheme. But as Tony and I mentioned earlier, now it's kind of not really going to be an issue for most people right the way up through consultant scales, really. Let me just check. So Melanie has asked twice, so we'll come back to it. Is there any further published information on whether additional pension bought as a lump sum during the remedy period will be on the RPSS in the tax year? So my understanding, and Tony's on, so Tony might also have some information on this, is not really. We know what they've put in the consultation documents and the consultation responses, and that seems to indicate that it will initially affect the pension's growth in the year that it's fixed. So, for example, if they fix it in 24-25, it will adjust the pension growth in that year. But then you've got an option to then potentially claim any compensation if it gives you a higher tax charge in 24-25 than it would have done at that time or comparatively. But there is no process about that yet. And so I would not expect your RPSS to reflect any changes to the additional pension yet. That's going to come later. But we do have up till 2029 to make any amendments to these assessments that we're doing, which I think is what's going to happen for those people. Let me have a look. I'm trying to skip back. Paula, you can send a Facebook message if you want to. If it's just a question, you can do that. That was fine. Michelle, hi Laura, really helpful. You're welcome. Is there an indication on the statements received to judge if we need to use the service or not? So, if you didn't have a tax charge before and your pension input amount has gone down, then I would say you don't need to use the service. If you're not sure, then you can start using the first part of the service, which does that initial triage for you, and that will either come up with that big box that we saw earlier that says no, you don't need to do anything, or if it says you need to carry on, that's an indication that you need to use the service. Mike, I'm going to throw this question to Tony in a minute. Not this one, Tony. I'll do it with this one. How do I request details from the website? Do I have to be a member zone? You don't have to be on member zone, no. So member zone is something totally different. If you use our contact link here, that's how you can request details. Member zone is a different subscription service, which you are more than welcome to have, but is not required for this work, no. Tony, any thoughts on what might happen with the tax-free lump sum and the budget?
Yeah. I mean, look, there's been lots of rumours, but they're just rumours. And I think you can only make your own plans based on current tax law. I mean, obviously we've got legal advice on kind of different scenarios, which, I can't divulge, but what we know is that when previously there's been changes to things like the lifetime allowance, they've had to provide some protections for people that have existing rights, for example, above certain levels. And it would seem very unlikely that they would try and introduce something that wouldn't follow that pattern. But, I don't have any crystal ball. The one thing that I will say that is a bit worrying is that Labour were very chatty with us before the election, and they're less chatty with us now. We're not speaking to them till after the budget. So I do think there are going to be some changes. From all the things that Labour have done, they generally have been pretty good to the public sector since they've been in. And I hope all the messages that we gave them before the election, they listen to, and they understand that if they do something adverse to the public sector, then that may have consequences on the workforce. And I'm sure they don't want to get back into industrial disputes. I'm sure they don't want to get back into a situation where people have to limit their work or retire earlier because Mr. Streeting will not be able to deliver on his plans if there's any reduction in workforce capacity. So I don't have any crystal ball or inside information. I tend not to get too excited about the rumours because I see the rumours every year. But let's see what happens, and obviously we'll provide commentary as soon as it's announced.
Thank you. I think that's the key thing. I mean, regardless of the change of government, which does make it a bit more exciting, every time there's an autumn statement or a budget, the pension rumours start, and 90% of the time nothing happens. So it's not to say that it won't happen, but it's a case of it's rumours, we don't know. The other thing is, if they do something such as changing the lump sum, which was the specific question, it has to go through a Finance Act. So it won't be that they announce it at the end of October and it suddenly affects everything from the 1st of November. There is going to have to be some sort of lead-in time because it has to be voted in through an act. So again, probably not a huge panic station at the moment. I mean, with the amount of work we've got going on here, I'm really praying they don't do anything, because it's just going to create more work in a very busy time. But I would just say don't respond to rumours, because that's all they are at the moment, as Tony says. So it's a question that's coming up every day with me at the moment. I'm just having a look what else we have. Just going back through some of the questions, I'm trying to find the one about divorce. Somebody asked me a question about divorce. I'm finding it. bear with me 1 second. So what I would ask as well is, if you do want to use our services, can you send me all the information in one go? So don't send me the statement and then the HMRC extract. Just wait till you get everything and send it together, and then it means we can just move much quicker to be able to support you with that process. Because what I'm interested in is trying to help as many people as I can. So the less kind of running around we have to do, the more we can kind of get through and help people with this. I've lost the divorce question, sorry, I'm trying to find it. There's a lot of questions. Where are we? Can you repost it for me? Divorce one. Thank you, Karen. In the middle of a divorce and will need to share 50-50 of my pre-March 22 95 pension at the point of sharing pre-March 25, previously paid A. Do I split and then rerun the calcs, or pay and then split? So the any pension sharing order for a divorce is effective from the effective date. So if the effective date of the order is the 31st of January 25, that's the date that the pension is split. So it doesn't change any of the previous annual allowance positions, because it's the date at which the order is applied. So so it won't. So sadly, when you have a pension sharing order, although it's splitting your pension, it doesn't change any of the growth that you've had up to that point, and so it won't change anything now. Everybody will get the slides. Yes, I mentioned at the start, I'm sending the slides around. I've also recorded the session and it will be available publicly on our YouTube channel. I'll also post a link to it in the Facebook group, but if you subscribe to the YouTube channel already, then it should notify you when a new video is posted. So you can also refer back to it as well. But yes, I'm going to send those slides around this evening. So that we can have a look at that. Do we only need you if we get the brown envelope? I would say probably yes. And even if you get the brown envelope, as I said, that's not an absolute that you need the assessment service doing, but you definitely do need to look at it so that you can decide what else you need to do. Maria, the figures in my new pension input and old pension input are much lower than the standard allowance. So do you think, no? So I would say if you didn't pay tax before, Maria, and your input amounts have gone down, you don't need to do a reassessment. But if you paid tax before and the amounts have gone down, then yes, you do, because it means that the amount of tax you owe will have decreased. And so you'll want to get that back, I would assume. Perfect. Right. Is everybody all right? Does everybody need to lie down in a dark room? So just a reminder, this is our process. This query here on our website will send you the information that you need to get your extract. You can have that for free. Just use that as you need to, so you can get through this as fast as you can. You can use us, MediFintech, Mazars, your accountant, anybody that you need to. I can't speak for them specifically, but I think their process is something similar to this. And we're all obviously trying to support as many people as we can. So do please take up the offer of the service if you can, because obviously it will help. The costs will be covered as part of that process. Anything else anybody would like me to go through? Thank you, Tony, for coming. I didn't know it was coming, but that's nice. Thank you for attending. If you ever need a plaster, we're here for you. We're all right. Everybody's fine. And what I would say is, when I send the slides, you'll have my email address. If you then email me back, and then I can have a look at it for you. If you want me to have a quick look, that is absolutely fine. Ian, I can't really comment necessarily. It doesn't sound like, from what you've said, that you would have a tax charge to pay, because looks like you've got lots of carry forward, but I don't know all of your details, so I can't confirm that absolutely, but it doesn't sound like it. But again, you can use that triage part of the calc to start with, and it will tell you if you need to carry on. Oh, Tony, was your hand up? Sorry.
Yeah, it was just that last question, Laura. The lady that said that all the numbers had gone down. The only caveat to your answer is about the 22-23 year. So obviously you're not going to be getting a refund because you didn't pay any tax in the first place, but you just got to be careful that you've not got a charge in the 22-23 tax year if your numbers have gone up. And on Ian's question, I agree with you. I don't think I've ever seen a band 5 to 6 ever get a pension tax charge, and so I'd be amazed if you did, unless you've got income from property for £200,000 that you've not sold us about. It's not going to be a problem.
No, I agree. It's I can't say absolutely, but it sounds very unlikely to me that that would be a problem. You are all very welcome. Thank you very much. I know it's a lot to take in. As I say, you can watch the recording back. I'll send you the slides. I think the takeaway message is if you get the statement, you definitely need to look at it. There is something for you to do. You can use the triage bit yourself if you want to. If it makes you continue, you might then want to look for some help because you can get that paid for you. Make sure that you get your data from HMRC as soon as possible because they are currently saying it's a 4-week turnaround, and we will see actually if that comes to fruition. And of course, if everybody is agreeable, what I will also do is if we find an update on the deadline extension, if there is one, I will let you all know as well, just so that everybody's up to date, if everybody's happy with that. Perfect. The YouTube channel, if you yeah, I can link to it on Facebook, but if you just go onto YouTube and look for Pen Gauge, then it's on there, so you should be able to find it. But I'll put some links on the Facebook group as well. Perfect. Everybody okay? Brilliant. You're all very welcome. I suggest you go and have a lie down in the dark room now, and I'll ping the slides around. And as I say, then you've got my email address if you need anything else at all. All right. So thank you, everyone, and have a really nice rest of your evening. Thank you.